Jeffrey Epstein is the only billionaire in the history of Wall Street who never made a single trade. Not one. Zero. Nada. If you look at the records of the Securities and Exchange Commission, the man is a ghost, a phantom. He does not exist. Yet, somehow, this ghost owned the largest private residence in Manhattan. He owned a private island in the Caribbean that cost millions just to maintain the landscaping. He owned a Boeing 727, famously nicknamed the Lolita Express, and a fleet of luxury cars that would make James Bond jealous. So here is the billion-dollar question that nobody seems to want to answer. If he did not run a hedge fund, if he did not found a tech company, and if he did not inherit a dynasty, where did the mountain of cash come from? The media wants you to focus on the girls. They want you to focus on the scandal, or the drama, and the black book of famous names. That is a distraction. That is exactly what they want you to look at. So you do not look at the numbers, because the truth is much darker and much more boring than a sex scandal. Jeffrey Epstein was not an investor. He was a human laundromat. He was a high-speed, industrial-grade washing machine for the dirtiest money of the global elite. He did not sell stocks. He sold silence. He sold a place for billionaires to park their cash where the taxman and the regulators could not see it. He was the dark liquidity provider for people who had too much money and too many secrets. You might think you know this story. You watched the documentaries. You read the tweets. But you are wrong. You have only seen the surface. Today, we are not going to talk about the island. We are going to talk about the ledger. We are going to talk about the bank accounts at JP Morgan and Deutsche Bank that remained open for years, flashing red alerts every single day, while compliance officers were told to shut up and look the other way. We are going to dissect how a college dropout convinced the smartest men on Wall Street to hand him hundreds of millions of dollars for absolutely nothing. Was it blackmail? Was it a Ponzi scheme? Or was it something much worse? By the end of this video, you will realize that Jeffrey Epstein was not an anomaly. He was a feature of the system. He was a necessary evil that the banking world created, nurtured, and protected, right up until the moment he became a liability. This video will not help you make friends at your next dinner party. In fact, it might make you want to vomit, but it will help you understand how the world actually works. Welcome to the Epstein economy. Buckle up. It is going to be a bumpy ride. You might be under the impression that the biggest banks in the world were tricked. You might think that Jeffrey Epstein was some sort of criminal mastermind, a suave con artist who bamboozled the innocent, naive bankers at JP Morgan and Deutsche Bank. That is a fairy tale. That is the story they want you to believe so they can settle the lawsuits and move on to the next quarter. The reality is much more insulting. The banks were not victims. They were the gatekeepers, and they left the gate wide open because Epstein was paying the toll. Let's look at the man himself. Before the private jets and the island, who was he? A math teacher at the Dalton School who got fired for poor performance. He did not have a finance degree. He did not have a PhD in economics. He was a college dropout from Brooklyn. So how does a guy like that end up managing money for the wealthiest families in America? He understood one fundamental truth about the ultra-rich. They do not want to follow the rules. They want someone to help them break the rules without getting caught. Epstein marketed himself not as a stock picker, but as a financial bounty hunter, a fixer. If you had a tax problem, he made it disappear. If you had a currency restriction, he found a loophole. He built an aura of exclusivity so dense that people begged to give him their money. He never solicited clients. He made them come to him. It was the ultimate psychological game. He acted like he was doing you a favor by taking your millions. And the banks? They fell for it harder than anyone else. For 15 years, JP Morgan Chase, the fortress of American banking, processed transactions for Epstein that would have gotten you or me arrested in a heartbeat. We are not talking about a few missed signatures. We are talking about massive cash withdrawals. $40,000, $80,000, sometimes more, in hard cash, several times a month. Who needs that much cash in the 21st century? Drug dealers and human traffickers. That is the list. Inside the bank, the alarms were screaming. The computer systems that detect money laundering were lighting up like a Christmas tree. But here is where the story gets truly dark. Let's imagine the conversation that definitely happened inside the compliance department at JP Morgan around 2011. Imagine a junior compliance officer, young, idealistic, looking at a screen flashing red. He walks into his boss's office holding a stack of suspicious activity reports. He says, "Look at this. This client, Epstein. He is wiring money to women with Eastern European surnames who have no business relationship with him. He is withdrawing stacks of cash. He is already a registered sex offender. We have to close this account immediately. It is toxic. It is illegal." And the boss? The senior executive, whose bonus depends on the assets under management? He does not look at the papers. He looks at the kid and laughs. He says, "Sit down. Do you know how much money Mr. Epstein brings to this firm? Do you know who his friends are? He is friends with Prince Andrew. He is friends with former presidents. He is friends with our CEO. We do not close accounts for people like that. We manage the risk." So they did not kick him out. They did the opposite. They put him on a special list, a white list, a list that effectively told the computer system to shut up. They manually overrode the compliance protocols. They looked at the evidence of human trafficking and financial fraud, and they decided that the fees were worth the moral hazard. They chose the profit over the law. They did not just open the door for him. They rolled out the red carpet, poured him a drink, and asked if he needed help counting the cash. This was not negligence. This was a business strategy. This is the point where the story stops being a financial documentary and turns into a psychological horror film. We are leaving the polished offices of Manhattan and entering the labyrinth. The Jeffrey Epstein operation was not a hedge fund. It was a hall of mirrors designed to make money invisible. He created a dizzying network of shell companies with names that sounded important, but meant absolutely nothing. Liquid Opportunity, LLC. Financial Trust Company, Southern Trust. Plan D. These were not businesses. They were mailboxes. They were empty vessels floating in the tax havens of the U.S. Virgin Islands, waiting to be filled with cash and stripped of their origins. The way he moved money was frantic. It was manic. It was the financial equivalent of a heart attack. Wire transfers, jumping from New York to Paris to the Caribbean in the span of hours. Checks written for hundreds of thousands of dollars to people who had no job title, no contract, and no reason to receive a penny. Consider the case of Les Wexner, the billionaire owner of Victoria's Secret. This is the craziest part of the entire saga. Epstein somehow convinced Wexner to give him full, unrestricted power of attorney. Do you understand what that means in the legal world? It means Epstein was not just an advisor. He became Wexner. He could sign checks in Wexner's name. He could sell Wexner's property. He could borrow money against Wexner's assets. It was a hijacking, a financial identity theft committed in broad daylight, with the victim signing the permission slip. Epstein used this power to transfer assets from Wexner's accounts into his own. Millions of dollars, mansions, jets, It was a wealth transfer so brazen that it defies every logic of self-preservation. Why would a billionaire hand the keys to his kingdom to a nobody? Was it blackmail? Was it a cult of personality? Or was it simply that Epstein was the only man willing to do the dirty work that Wexner needed done? The banking systems were hyperventilating. Every time Epstein walked into a branch, the risk algorithms screamed. But the human element, the greed, silenced the machines. Let's go back inside the bank for a moment. Picture a mid-level risk manager, sweating, calling Epstein to ask about a suspicious withdrawal of $100,000 in cash. The risk manager says, "Mr. Epstein, we need to verify the purpose of this withdrawal. Federal regulations require us to ask. It looks like structuring to avoid reporting limits." And Epstein? He doesn't apologize. He attacks. He says, "Do you have any idea how much money I keep in your pathetic little bank? I am buying a painting. I am paying a contractor. I am tipping the pilot. It is none of your business. You are a service provider. You work for me. If you ask me one more question, I will pull my entire portfolio out of this bank by noon, and I will call your CEO personally to tell him that you, specifically you, lost the biggest client in the division. So, are you going to process the withdrawal, or should I start making calls?" The risk manager hangs up the phone. His hands are shaking. He approves the withdrawal. The red flag is lowered. The money leaves the building. This was the mania. It was a culture of fear, mixed with the fear of missing out. Deutsche Bank saw JP Morgan making millions in fees from Epstein, and they got jealous. They wanted a piece of the action. They courted him. When JP Morgan finally, after years of enabling him, decided he was too hot to handle and fired him as a client, Deutsche Bank didn't run away. See, they ran towards him. They rolled out the red carpet for a known sex offender because they were desperate for liquidity. They needed his network. They needed his deposits. It was a race to the bottom of the moral barrel. The entire compliance department was reduced to a rubber stamp. They saw the shell companies. They saw the cash. They saw the chaos. But they were drunk on the fees. And when you are drunk on easy money, you don't notice that the house is burning down around you until the roof collapses on your head. But let's stop looking at the chaos for a second and look at the ledger. Let's look at the check that exposes the entire lie. Leon Black, the billionaire founder of Apollo Global Management, paid Jeffrey Epstein $158 million. Read that number again. $158 million. For what? The official explanation is tax and estate planning advice. This is the single most insulting sentence ever written in a financial report. You could hire the entire tax department of Goldman Sachs, plus every lawyer at Harvard, for a decade, and you still wouldn't spend that much money. You don't pay a college dropout $158 million to fill out your tax forms. So, what was inside the black box? What was the actual product? Jeffrey Epstein was selling a financial black hole. He built a mechanism that allowed billionaires to bypass the laws of physics that apply to the rest of us. He utilized a specific regulatory loophole known as the family office exemption. In the eyes of the SEC, if you were just managing your own family's money, you don't need to register as an investment advisor. You don't need to file public disclosures. You don't need to tell anyone what you are buying or selling. Epstein realized that if he could convince the world he was just managing family money for a few billionaires, he could operate completely in the dark. He became a ghost ship in the middle of the ocean. Here is how the mechanism likely worked. It's a transaction based on the dark multiplier. Let's say you are a billionaire. and you have a massive tax liability. Maybe you owe the IRS $1 billion. You want to make that disappear. You can't go to a normal accountant because a normal accountant follows the law. You go to Epstein. Epstein proposes a structure, a complex web of grantor-retained annuity trusts, GRATs, and offshore entities. It is aggressive. It borders on illegal. It might even cross the line. But it saves you that $1 billion. In exchange, Epstein charges you a fee of $150 million. To the outside world, it looks like an insane fee. But to you, it's a bargain. You just paid $150 million to save $1 billion. The return on investment is astronomical. That wasn't a consulting fee. That was a commission on tax evasion. It was a bribe paid to the gatekeeper of the loopholes. He also sold something else: mutually assured destruction. This is the darkest part of the value proposition. When you engaged Epstein, you weren't just hiring a money manager. You were handing him dirt. He knew your secrets. He knew where your assets were hidden. He knew about the girls. This created a perfect, unbreakable bond. You couldn't fire him because he knew too much. He couldn't betray you because you funded his lifestyle. It was a symbiotic relationship between a parasite and a host. But in this case, the parasite was keeping the host alive. The $158 million wasn't a payment for services rendered. It was an insurance premium. It was the price of keeping the vault door locked. Epstein was the ultimate keeper of the keys. He convinced these titans of industry that without him, their empires would crumble under the weight of taxes and scandals. And for a long time, he was right. He was the most expensive and the most dangerous service provider on the planet. But here is the thing about dancing with the devil. Eventually, the music stops, and when the lights come on, everyone sees who you are holding hands with. For decades, the system protected Jeffrey Epstein. But in July 2019, at Teterboro Airport, the shield finally cracked. He stepped off his private jet from Paris, expecting a limousine, and found handcuffs instead. The untouchable man was suddenly very touchable. And the moment the handcuffs clicked, the panic on Wall Street was palpable. You could practically hear the shredding machines turning on in skyscrapers across Manhattan, the emails, the meeting logs, the transaction records. Everyone scrambled to distance themselves from the radioactive man they had dined with just weeks before. Let's look at the receipt. What was the price of this moral bankruptcy? JP Morgan Chase agreed to pay $290 million to settle the lawsuit from Epstein's victims. Deutsche Bank agreed to pay $75 million to the victims and another $150 million in penalties to regulators. It sounds like a lot of money, doesn't it? Almost $500 million in total penalties. Justice served, right? Wrong. Let's put that number in perspective. JP Morgan generates about $130 million in revenue every single day. The fine for enabling the worst sex trafficking ring in modern history was equivalent to about 2 days of work for them. It wasn't a punishment. It was a rounding error. It was the cost of doing business. They treated the fines like a parking ticket. Annoying, but necessary if you want to park in the VIP spot. Let's go inside the boardroom for one last conversation. This is the moment the settlement was decided. Imagine the general counsel walking into the CEO's office. The mood is grim, but calculated. The counsel says, "Sir, the evidence is damning. The emails show we knew everything. If this goes to trial, the public will see the internal messages. They will see the overrides. It will destroy the brand." The CEO looks out the window at the skyline. He doesn't blink. He asks, "How much to make it go away?" The counsel replies, 290 million. That settles the class action. No admission of guilt. We just pay, and the headlines stop. The CEO nods. He doesn't even check the budget. He says pay it. Wire it today. I want this story dead by Monday morning. That is how it ended. The banks wrote a check, and they washed their hands of the blood. But for Epstein, the crash was literal. On August 10th, 2019, he was found dead in his cell at the Metropolitan Correctional Center. The official ruling was suicide. Maybe he did kill himself. Maybe he realized the game was finally over. Or maybe, just maybe, he was the only loose end in a story that threatened to bring down powerful men on 3 continents. His death was undeniably convenient. The criminal case was closed. The testimony was never heard. The secrets in his head died with him. The crash didn't break the banking system. It didn't even scratch the paint. The stock prices of JP Morgan and Deutsche Bank recovered within weeks. The executives kept their bonuses. The only thing that crashed was the illusion that there is any line these institutions won't cross for a profit. They proved that if the client is rich enough, there is no such thing as a red flag. There is only a price tag. So, what do we do with this information? Do we just get angry and tweet about it? No. That is what they want you to do. Anger is cheap. Anger is fleeting. What you need is armor. The Epstein saga proves one thing. The financial system is a jungle. It is full of predators in Italian suits who will eat your lunch, your retirement, and your dignity if you let them. They have the algorithms. They have the lawyers. They have the compliance teams that know exactly how to look the other way. If you want to survive in this jungle, you cannot rely on the regulators to protect you. You have to protect yourself. You have to understand how money moves, how leverage works, and how to spot a scam before it swallows you whole. That is why you are here. Subscribe to this channel. We don't sell dreams. We don't promise you a Lamborghini. We teach you personal finance and investment strategies that actually work. We teach you how to read the fine print that everyone else skips. So we teach you how to spot the difference between a golden opportunity and a gilded cage. Hit the notification bell, because next week we are going to expose a tech genius who incinerated $10 billion of investor money in less than 48 hours. You think you know the story? Trust me, you have no idea. You don't want to miss the autopsy on that one. Here is the final lesson to take away from the Jeffrey Epstein economy. It is a lesson about the color of money. We are taught from a young age that crime doesn't pay. We are taught that if you break the law, you go to jail. But the ledger of Jeffrey Epstein tells a different story. It tells us that if the crime is big enough and the profit is high enough, the law becomes flexible. Banks like JP Morgan and Deutsche Bank didn't fail to see the red flags. They saw them clearly. They just chose to paint over them with green. They proved that compliance is just a theater performance designed to make the middle class feel safe, while the VIPs play by a completely different set of rules behind the curtain. The tragedy isn't just that Epstein got away with it for so long. The tragedy is that he was enabled by the very institutions that hold your savings account. The teller who asks you for ID when you withdraw $500 works for the same company that wired millions for a sex trafficker without blinking. It is a bitter pill to swallow. But in the world of high finance, morality is often treated like a depreciating asset, something you write off as soon as it gets in the way of a bonus check. Jeffrey Epstein didn't just hang himself in that cell. He hung the entire reputation of Wall Street right next to him. The man is gone. But the greed that created him? That is still very much alive, sitting in a corner office, waiting for the next client with a heavy suitcase and a dark secret. Cheers.